This is the Friday, April 3rd, 2015 version of the Market Plus segment. Joining us now is Brian Roach. Brian, thanks for joining us again.
Thanks, Mike.
Now, on the show, we cut short our discussion on soybean pricing, and we saw some interesting moves this week, a little bit of trade unexpected moves, particularly in that soybean acreage number, as producers are looking for new crop sales opportunities. Are we there yet? Do you think you pull the trigger on some new crop beans?
Well, the beans got what corn gave up. And so beans were on the positive side this week and on Tuesday's report, as acres weren't not as large as we thought. Plus stocks were somewhat smaller than expected, and so that bodes to a bigger demand stream. That gave us a pretty strong move in the November contract up in that 970 area. I'm still looking for more of a $10 market as a place to add some sales here. It's not always, using a price like that is not always the wisest. So I think, what we do is we have a sell signal that's an oscillator that points out these peaks. I think when we're in those sell signals and when you're looking at the peak, if it's close to $10, you want to begin taking some risk off the table. The fundamentals in the bean market are still negative. They just are. Now the technicals have turned more positive here recently. Talked about that double bottom, where we bottomed in November. We're trying to bottom this March and spring period here with another low, but we need to see some higher trade above 990 on the May to kind of confirm that. So, but I think that producers should not be surprised if we see a low this fall in the bean market driven by fundamentals. Big crop in the U.S., followed by another big crop in South America coming online here, and then a confirmation of a U.S. crop here. We could see something back down to that $9 level or below, depending on how the yields perform. So you want to be taking risk off the table on the next 2 or 3 rallies here. We use our Roach Ag sell signals. Those work pretty good.
And you talk about this fundamental picture on the supply side being a ceiling. It's an overhead. It's an overhang on this market, rather. But looking at the demand side, we continue to see very, very strong export reports and inspections. We continue to see positive crush margins for U.S. producers. I mean, soybean demand is phenomenal. Do you anticipate that to continue on into the spring and summer?
I think so. I mean, once the Brazilian and Argentine crops are out into the market, the U.S. supplies are high quality. They're very reliable. We have good access to exports. And so the meal markets have continued to outperform from last fall, and they continue to outperform. You do have a little help coming from an Argentine farmer who's not wanting to let go of beans. They are a major world supplier of meal, and I think we're seeing the benefit to that here this whole crop year in the meal market. That's helping with this bean fundamentals, really pointing to lower prices, but also providing a fair amount of support up above $9. I mean, you have to look at current prices here. Our low prices are our prior decade highs. And so as we bring that forward here, we're finding a fair amount of support at long ago low highs. And so technically we need to confirm another bottom in the bean market. I think that'll help the November contracts, but you don't want to ignore rallies that offer you a chance to take some risk off the table.
You bet. Well, now let's jump into the cotton market. We saw acreage down in the cotton upcoming this season. Where do you see this market headed as we work into springtime?
Well, cotton has a problem with large world supplies. And as we came into the U.S. This planting estimate number that just came out on Tuesday, cotton acres were down 13% from last year. We've seen prices rise accordingly, and of course we have a weather problem. We have a lot of wet weather where some of the country's cotton is grown. I think that from a new crop cotton marketing standpoint, you'll want to wait and see how this weather plays out. But I would be an eager seller on much more of a rally here from this standpoint.
All right. Now we want to get to some of our Twitter questions. We had a lot looking to test our newest analyst on Market to Market. I want to start here with Brian in Indiana. He's got a question. He must grow some wheat over there in Indiana, and he's curious, when do I let go of the last bit of old crop wheat I haven't yet sold?
We have a weather rally upon us. We have very short-sighted spec money in all 3 classes of wheat. And my expectations is that we continue to trade higher in the wheat market. We traded along the high side of the ranges here all week, and the dollar continues to be somewhat of a tailwind. And my suggestion is that a rally up from these prices here, you're going to want to reward that rally. That may be the place you want to dump it, particularly if you like the price.
All right. Now, we've got a question here from Jared in Omaha, Nebraska. And Jared's looking at this. So the survey was completed March 1st for the acreage intentions. It's now March 31st. He's curious, how much difference do you see in intended acres with the recent price action throughout the month of March? Has that changed acres, in your opinion, in the past 30 days?
I don't think so. You know, it was interesting to me to see where the overage in corn acres came from in this past report. Half of those acres were in Minnesota and Wisconsin, 300,000 and 200,000 each. The rest of it came from fringe states that are not necessarily known for growing big corn numbers and really supporting a big national yield, like last year. Last year we had fringe states that really performed. I mean, Illinois performed, but so did all those other fringe states. Those fringe states showing that they still have interest in corn. I'm not so sure that plays out. And so it wouldn't surprise me to see, particularly with the weather the way it's been, people get behind. It's easy for those farmers in those fringe states to make decisions over to beans pretty quickly. And so really, the stake in the ground is out there now as of Tuesday. And now it becomes a weather and a price-driven decision-making into final planting decisions here. That could take us all the way into the first or second week of May before we really have a pretty good idea of how those decisions were played out.
Certainly, and as you look at some of those fringe states, those outside the Corn Belt, the heart of the Corn Belt states, we've got the price thing fairly well sorted with beans now trading at a little premium to corn.
Right.
It's really going to ride on weather.
Right. I think this week's price action in beans give a nod to beans in some of those areas.
All right. Now we do have a question from Neil. He's up in Linden, Wisconsin, and he's just got the what if question. So we want you to gaze into your crystal ball. So 2012, as we discussed, we had 123 national average yield. Neil's question is, looking at these reduced acres, what if corn comes in at 150 per acre? What would that do with the given corn demand that we've got out there in your mind?
I would look at it this way. If you look at the stocks adjustment on that kind of number, the ending stocks number, that would take us down to close to 1 billion bushels. Okay, and let's say we're trading a 1.8 billion bushel ending stock corn ending stocks number. And the way I look at it is every 100 million bushels of corn is worth about 15 to 20 cents in price. So come up with your scenario, do the plug and chug, as I like to call it, and look at where that puts us. And if that's 800 million bushels below where we are today, that's an increment of 8 times 2. I mean, so add a $1.40 to $1.60 to prices. I think that's how you look at it after all the dust settles. During the growing season, I mean, you really have to look at what's the real yield, real or perceived. And if it's perceived below 150, then of course we can trade on up. And if that's where we end up, well, I think I've given you the way I would look at economic value of corn based on 15, 20 years of history.
You bet. And like we saw in 2012, we get a lot of reports of poor to very poor crop conditions, and we get that compelling story for that outside money, and who knows where that could end.
Well, the specs in the corn market are not that long. And so we have the potential here for some short covering, and a lot can happen, a lot of volatility can happen, and I think we need that in this corn market.
All right, so stay tuned.
That's right.
Well, Brian, thank you so much for taking the time to join us this week.
Thanks, Mike.
Thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so. Tell all of your friends to do so, and we will continue to get expert analysis right to you. Thanks for watching, and have a great week.